Good morning, everybody, and welcome to today's episode of Market Check, brought to you by Because Bitcoin. A reminder that there is no second best daily YouTube live stream to talk about markets. Welcome, guys. I'm Snorlax. You guys also know me as Tommy. I'm joined by Max and Jackus. Hope everybody is having a great Wednesday. Happy Hump Day. We are not necessarily halfway through the week yet, but maybe later today or after today, we will probably be closer to that mark. Bitcoin's still probably battling with some critical ranges, and equities looking like they might be set for a blow off top. Before we talk about that, I want to make sure to shout out the like button before we get cooking, before we start sharing all that alpha. We always appreciate when you guys smash the like button. And I'm sure we'll bug you again. But right now, like I said, it means a lot to us when you guys engage, when you guys enjoy our content. And of course, the algorithms love it when you guys hit the like button. And we're over 3,000 subscribers now, and that's not just down to our content. That's equally as much you guys being here every day and watching our content. And like I said, hopefully enjoying it as well. But yeah, speaking a bit more granularly, let's talk about Bitcoin, right? I mean, Bitcoin has been battling with its post-nuke range really for the last few days. Will it nuke further? Will it U-turn out of here, or will it just kind of chop sideways and we get this initiation of a very aggressive period for altcoins? I think there are still a lot of questions about the nature of which this market is going to choose to take here over the next 4 to 5 weeks. And for me, I'm kind of just watching Bitcoin at specific levels because, given that we've been in this range for about 3 or 4 days now, we have a fair bit of positioning built up, right? I look at 41.6 to 41.8. Above that level, there are a lot of longs that came in right after the nuke. People playing for very quick reversion, and we can see that level is still capping price for the most part. We're trading into it at the moment. But if we can get a strong flip of that level, I think you can firmly say that we're probably going to put the squeeze on the shorts, at least into the mid 43s, probably even higher given the context of the move at that point to me. But the flip side of that is, if you can't break those highs, if you continue what is effectively at that point a bleed after a nuke, you set the stage for, at the very least, I think a wipe into 38, 40K, which is something that we've talked about over the course of this week. So a very, very big lower time frame range for Bitcoin to figure out its resolution from. On the flip side, you have equities, which look just incredibly strong. Volatility is up, but the S&P is still up anyway. We're probably finally approaching that scenario that Chem Carson has been talking about for quite some time, where you get a market rip that's coincided by a rise in volatility. Just because, you just don't see that very often. And there's a lot of, more granular reasons and specificities behind that. But I'm not going to get into that, nor do I think I could explain it well enough for you guys to understand. But equities are strong. That's the bottom line. And we'll probably have Powell come out today and say a whole bunch of nothing. And I can't imagine that the market will respond by doing anything other than continuing to bid, which is exactly what it has done since it formed a low about 6 to 8 weeks ago. Right. So I think the end of this week, at the very least, will provide some upside in equities. Bitcoin, hopefully some answers. But let's talk about it, guys. What are we seeing in the markets right now?
Tommy, good morning, everybody. Thanks for being here. And just a little reminder before we really get rolling here. Actually, let's start with this. We actually have this stream available on Twitter now. We were tinkering with it. It was one of our normal viewers here, one of our regulars, Champs. He mentioned it yesterday. He's like, "Why don't you guys stream this to your Twitter as well?" I was like, I didn't even know we could do that. Honestly, I'm not super techie with streaming. We just kind of have StreamYard do it for us. And I was looking into it, and it turns out I just had to link the Twitter, and then I just click go live, and it basically syndicates it onto Twitter as well. So that's kind of cool. But yeah, guys, if you are new here and maybe you're just seeing this on Twitter for the first time, we also have the YouTube option available. YouTube's maybe a little bit more fun because we got the live chat going, and that usually gets pretty nutty and it's fun. So if you want to join us on YouTube as well, pop on over there, join us in the live chat. And before we really dive into it, guys, I need a favor from you all, and you know what it is, because a lot of you are regulars, you show up here every single day, and you know that I like to badger you at least 2 or 3 times. It's a healthy amount of badgering, all right? Before we really dive into it, and we do a 2-hour-long alpha dump, please consider liking the stream. Either if you're on YouTube, like it. If you're on Twitter, like it. Maybe dish us a retweet. The reason that we're able to grow so quickly here because Bitcoin is because of your guys' continued support of what we are building here. You guys show up every single day. You like our content. You retweet our content. You subscribe, all the above. And again, our growth is really attributable to, yes, we show up every day, but you guys enjoy our content and you guys support us. So please just take one quick moment. Hit that thumbs up button for us on YouTube or that like or retweet on Twitter. Maybe leave a comment, give us some feedback. We'll be checking both YouTube and Twitter for comments. So, guys, thank you so much for being here. Really excited for today's stream. And yes, like Tommy mentioned, we do have FOMC today. We were talking about it this morning in our Discord. I think that it's pretty obvious that the effects of FOMC are largely muted compared to what they were, let's just say, even this time last year. Look, not to say it's not important, because it is, but it's not quite as important. And I mean, let's talk about this, right? I'm going to post this probabilities table right here, and we're going to talk about what's expected today. So for those that are unfamiliar with this is a little boring, right? We're not going to spend too much time on it because, again, I think that it is relatively muted. But right now, rates are between 5.25 and 5.5, so 525 basis points to 550 basis points. Today's meeting, December 13th, there's a 98% chance of a pause and a 2% chance that we're going to get a hike. We're not going to get a hike, okay? They're not going to surprise anybody. In my opinion, it's probably, it's an all but a certainty we're going to get a pause. Even going into, end of January of next year, 90% chance that this pause is going to continue, okay? And then we get into March, 50% chance. But what's really interesting is that as of right now, the market is pricing in almost a 50% chance of our first cut coming in May. So basically there's between a 30% and I guess 50% chance. Adding them together, right? It's like a strong majority that will either be 25 or 50 basis points off of where we're at right now. So in my opinion, if history tells us anything, there's this Goldilocks period. Now I'm gonna put this down, okay? We're gonna put the effective federal funds rate over, and we're gonna have to put this in log. Actually, we don't need to. I can just adjust the chart here. We'll go to the 2-week time frame. History tells us anything. Let's try 3-week. I want to be able to see as much data as possible. Typically, there's this window of time where the market can perform extremely well during a Fed pause, and then once we start to get cuts, then the market actually starts to go down. And the reason for it is just like interest rate hikes are lagging. It's going to take 12 to 18 months for them to work their way through the plumbing of our economy and actually be felt. Similarly, it's the exact same thing for cuts. They're not felt immediately. So people start thinking and they go, oh, well, okay, we got through all the, we got through all the turbulence. We got through all the, interest rate hikes. Now we got cuts. They're going to start lowering interest rates. Low interest rates is bullish. Well, yeah, but we're just starting to feel the effects of the increased interest rates, the heightened interest rates. And now it's going to take 12 to 18 months for the cuts to be felt as well. It works both ways. So my opinion right now, based on the probability table that I was just showing, I'm actually we'll extend this a little bit. There is this window of time where equities can rally very, very aggressively through a Fed pause. So let's just take a quick look right here. The pause here started right around here. We rallied 50%, back before the 2008 crisis, and then we started to get rate cuts, and then we had a nuke. All right. I'll adjust this a little bit. Same exact thing right over here. We rallied aggressively. We start to get cuts, and we had like 2 batches of cuts, right? You can see they cut and then paused, but we rallied 65% and then had the COVID crash. So again, we're not supposed to get, at this point, they're not forecasting real economic turbulence and cuts until basically Q2. I mean, potentially very end of Q1 here. There's a 45% chance as of right now, and this table is constantly changing, but there's a 45% chance that basically they hold rates right where they're at all the way until the very end of Q1. It's an overused term, but it's not inaccurate to suggest that, we dipped into this pause and we could have a serious rally all the way through potentially Q1, Q2. I don't know where it takes us, right? I just dragged and dropped that. But as long as we're in this Fed pause window right here and we don't have any bad economic data, then, perhaps we just continue to rally. And I think that not only will equities, be beneficiaries of this Fed pause, like we've been talking about, but also I think crypto can benefit, dramatically from here, especially if we have some additional tailwinds like ETFs being approved. There's a FASB change today, which actually opens the door towards companies being able to adopt sort of a similar corporate treasury strategy to MicroStrategy, where they can actually appropriately mark to market the value of their Bitcoin, which it looks like is just being changed right now. So previously that was a major impediment or encumbrance or deterrent for companies wanting to hold crypto assets on their balance sheet, because they would basically have to inappropriately mark to market it, where it wouldn't, for publicly traded companies, it wouldn't make sense. It would potentially negatively affect their share price. So we're seeing, a lot of these things kind of come together and culminate at the perfect time, where it really feels like we're on the forefront of institutional adoption for crypto. And a lot of companies and, family offices would potentially be interested in, adopting maybe not as aggressive of a strategy as Michael Saylor and MicroStrategy, but hold and have some exposure to an asset like Bitcoin on their corporate balance sheet. Now we'll have that option. And I know it doesn't take effect for a little while, but it's a step in the right direction. These things are slow moving. But anyways, I've been cooking for a little bit. Guys, just a quick reminder. We got over 50 people watching on YouTube. We got like 25 or something like that on Twitter. Guys, hit that thumbs up button for us. Hit that like button for us if you're enjoying the content so far. It really does wonders, and really helps us grow. And thank you guys again so much for being here. But yeah, I want to get some thoughts from you guys. Jackus, what's going on, man?
Hey, brother. I'm just creating a new meme for you.
Jackus is our chief meme officer now. He's been promoted from analyst at Because Bitcoin to CMO, chief meme officer. He's been killing it.
The meme war. And I went to I just sent it to you. The text can be adjusted, but
where did you send it to me?
Discord.
Oh man, I'm scared to open this. Okay. Here's the thing. I love the meme, but I can't post it because I'm scared of that word on YouTube. I'm scared of that word.
Give me 1 sec.
You need to come up with a synonymous word, because I don't want to, you know what I mean? They're a little woke sometimes. I don't want to.
Wait. But we keep on saying it on the stream, don't we?
Well, yeah, you say it, but you kind of sneak it in like really quickly. I don't want it posted up there for too long. I think it's okay if you're cooking and then you just like spit it out quick. But
all right, I'll change it. Well, I'll leave the word to Tommy for now. I'll find a different version and then I'll start cooking my stuff. Max, yeah, chat. Max, you haven't seen the show yesterday, but I was cooking with the memes.
No, I saw it. I rewatched it. You had like 10 different memes. Can we throw some more of those up? We need to get the likes up, guys. We need to get the likes up. What are we at right now on YouTube? We're at 35 likes. Guys, come on. That's light work. We need at least a 1-to-1 ratio. We got almost 50 people watching on YouTube. We need a 1-to-1 late. The Twitter crew is kicking your guys' butt. They're liking the video like crazy. But anyway, I had this drawn here, Tommy. What do you think about this? If you flip this 42.2 level here on Bitcoin, in my opinion, it looks like the lows are continually being respected, right? If we're in a more of an expansion period of this sort of climb upwards here. where again the lows are being respected. We did have a bit of a gap up here, but I still think we're in this vertical accumulation, and potentially the real leg up hasn't even started yet. I know maybe that's a little bit overzealous, but I truly think that we're, as long as these lows remain respected and my loosely drawn parabola here continues, we're probably poised for significantly higher.
Yeah. Yeah, no, I mean, I could see it. It's contextually a huge level, right? We've talked about it on this show a few times this week about how longs have come in. That S&R level right now that we need to flip is pretty much down to. You had some early longs come in after the nuke that we had, and they're currently underwater. But if that changes, right, you can see it pretty quick. Chasing, not just from people on the sidelines, but also from people adding to their positions, on confirmation, right? And I would say the next level we're looking at that point is probably the middle of that FVG for some sort of reaction. But, we've kind of seen Bitcoin paint this pattern a few times where if it is able to flip the, that early S&R, and I think we had some sort of pattern like this in, I want to say February, of this year, where we painted some sort of, some nuke like that, and we ended up, U-turning to another high before going sideways again, which would be very beneficial for altcoins. You would have to imagine if we go up 10% and then sideways for maybe like another week or something like that. And then there's the alternative, which is, it's a big level as far as the entire structure. So, maybe it just gigasends, right? I think that's always a possibility given the momentum and strength that we've kind of observed in Bitcoin here over the last few weeks.
Yeah, I think it's a great point. And I'm going to get rid of this now. I want to just talk like real high time frame. So I was just banging the drum on this, by the way. There was so much fear yesterday on the timeline. And it makes sense, right? But you can tell that a lot of people, they've kind of forgot what trading very bullish conditions are like. And it's not uncommon to see these flushes. And it's actually very, very healthy to get these leverage flushes. And it's not surprising at all. But there's some very obvious high time frame. We talked about this yesterday, but I'm gonna do it again real quick today. We've talked about these RSI divergences, on the 2-day and 3-day, and how they're really telltale signs of high time frame exhaustion. And there's this misconception, and maybe it's a result of anxiety or maybe being overexposed for a lot of people, but they think that tops are so quick to form, just like they think bottoms are so quick to form. There's this pressure that they put on themselves to, I gotta sell this. This has got to be the Pico top, or I got to knife catch this. This has to be the Pico bottom. And in reality, it's so rare to see V bottoms and V tops. More often than not, tops and bottoms are formed over many, many weeks and many, many months sometimes. And here's just a prime example of it. Like let's go back, and I just highlighted a handful of examples here. But look at this top that formed basically from the 2019 bear market, the depths of the bear market, to this extreme rally. And granted, we did have the COVID flush in March, but when you start to, this is the 2-day time frame, by the way, it's a really obvious sign, right? You see an RSI uptrend, higher high, and then you start to see the first high time frame divergence where RSI on the 2-day or 3-day. That's the one that I like to use for identifying these high time frame tops. And it's a very simple strategy, nothing profound. RSI bounces into a lower high and price makes a higher high. And the first divergence typically marks the exhaustion, the beginning of the exhaustion. And then look what happens after, a prolonged period of drawdown or ranging. And, we did have a huge flush here. I don't know. Look, that was, in my opinion, black swan or, whatever, pretty crazy event. But we continue onward. The first top, in the last bull market, you see price consecutive or price making higher highs, RSI making higher highs. And then upon the first divergence, you can see it happened right here. You begin to see, the momentum really, really dwindle, really, really dwindle upon this first divergence. And then it took many months after that for price to really distribute further. Okay, so another prime example where this top was formed, you know, if we count this as the higher high, I mean, for us to break below that level, it took us like 100+ days, 3, 4, 5 months potentially, depending on where you want to measure it from, for us to really distribute. So again, right here, the 69K top for Bitcoin, RSI makes higher high, price makes higher high, and then we see RSI make its first lower high, price makes higher high, again, another divergence, and then it's down only. But look how many months it took to form, you know, from this high to here, the 69K top took, you know, 2.5, 3 months. You know, so again, it doesn't happen like a V top. And I'm arguing that the same thing is going to be happening here, where everybody's so eager, you know, and so anxious about price. The odds that this was the Pico top and we're about to just like high time frame distribute and mark down on a V top, it's not in line with what we've historically seen here at all. Not even close. It would make a lot more sense for us to, you know, curl back up here. I don't know where it goes, right? And then RSI comes back in. Maybe it's here. Maybe, you know, we go down first and then come up. I have no idea. But I'm looking for RSI to do on the 2-day or 3-day what it's been doing on basically every single higher time frame distribution or top being formed. So again, I just think it's important to highlight that, you know, there's this misconception, and I think that's the word for it, is there's a misconception that tops and bottoms are formed overnight, when in reality, they're formed over many months and many, many weeks. And guys, just a quick reminder here. Thank you guys so much for being here. We got 60 people watching on YouTube. We got over 40 watching on Twitter. Thank you guys so much for the support. If you guys are enjoying the content, just a quick reminder to hit that thumbs up button on YouTube, hit that like button on Twitter. It just takes 1 second and it really helps the channel grow. And again, we're able to grow so quickly. We smashed 3,000 just recently on Twitter. We smashed through 15.5 on Twitter. The reason we're able to grow so quickly is because of your guys' continued and consistent, diligent support of what we are building here. And again, if you are new here, this is because Bitcoin's show, Market Check. We run this show 5 days a week, Monday through Friday at 10:50 a.m. Eastern time with me, Snorlax, Jackus. Usually Tucker and Will are here as well. And it's basically a 2-hour-long alpha dump. We focus primarily on technical analysis, high time frame narratives, positioning. Sometimes we actually do some live trading. The show is, you know, 4 or 5 months old, something like that. But today's the first day we actually started showing it on Twitter as well. So it's cool to see over 40 people hanging out on Twitter. Yeah, we should have been doing this a long time ago. But yeah, guys, if you can,
second best. There is no second best.
There is no second best. There is no second best. But yeah, guys, please just do us the solid. Hit that thumbs up button for us or hit that like on Twitter. It really, really does wonders for the show. And again, then you can be made aware of when we go live if you subscribe as well. It's a great subscription. It will change your life for the better. But yeah, anyways. Oh, Jack.
What do you say, Jackus?
Jackus will cook for us today.
You gonna be greedy, Jackus, today?
I see the people are hungry.
They're famished.
Hungry for some alpha.
They're famished.
But all I got today is the memes.
Did you make a new meme, Jackus?
I did. I think this is censorship resistant.
We gotta be careful, man. We gotta be careful. All right, where is it? Did you message it?
Yeah, private Discord. You can put it on top of this crazy
All right, I'm gonna throw up some of the ones you did yesterday too. I'm gonna do a whole preview of likes today. This was my favorite one that you made yesterday, Jackus. This was the best one maybe I've ever seen. This is so funny. This one cracked me up, guys. So Jackus made this meme. I wasn't here yesterday, and I'm usually the guy in charge of just like reminding everybody to like, because you guys show up, we need you to like it, you know, helps us grow. But Jackus made this meme yesterday. YouTube Market Check, enjoy your. Here is Max. Don't forget to smash the like button. Don't forget, guys. Don't forget.
You need to read it in the Jonas voice.
Can you read it, Jackus? You read it.
Here is Max. Don't forget to smash the like button.
All right, I'm going to show. Here's another one. Hang on. I'm going to show the one that I made. Where's the one that I made? I had to have saved that somewhere. Yes, right here. All right, I started with this one, guys. It started with this one. So this was the one that I made yesterday. Market check, enjoy your. Here I come. Hey, bro, you should really like the stream.
I love this one too.
Now, I can't walk up to you guys in person at the urinal and remind you to like the stream, but digitally over the internet, this is the persistence that I'm hoping to display. I am literally doing this over the internet, guys. I need you to like that stream for us. But anyways, we'll get back to the discussions. We'll save the legging for later.
I love that, like, every YouTuber or every content creator basically needs to do this, otherwise it's crippling his viewership. It's really not working. It's sad, but it's how it works nowadays, that we have to remind the people to do that, but because the algos. But I love it that we do it in such a fun way that even the people have to enjoy it, right? I mean I mean, that's pretty cool in my opinion.
We try to make fun of it, because it's like, I know it can be a little annoying, like the video, guys, like the video, but I know there's a lot of people that are liking it in their heart, but they just kind of forget to like it, and it just does such wonders for the channel,
Yeah, it does really help, guys. Whenever you guys start hitting it, it shows to more people. It shows to you frequently. I know that you guys show up every day, some of you, of course, but it does show to you on your timeline too. And as we kept on saying, guys, the more you will help us grow, the more guests, interesting guests, we will be able to bring to you guys. And that means basically, like, you are basically helping yourself with the likes, right? Because that means more content in the future for you too as well. So it's a win-win for all of us.
Help us help you. But anyways, this is an interesting fractal we've been talking about. Now,
so far.
Yeah. So look, here's the disclaimer with this. All right. There is not a direct correlation between Solana and the US 20-year, but as you know, fractals work in the sense that markets top and bottom similarly, whether you're trading crypto, equities, debt products, whatever it is, right? That's the reason fractals work. Not that we're looking for correlations between the two, but there are similar signs of exhaustion or reversals, really on anything, right? Like, we're looking at two markets that are not correlated at all. And we're actually, we gave this play out in our Discord, short Solana from $74. So up here, and it was based off of, yes, we were seeing some higher time frame signs of exhaustion besides this fractal, but there was confluence because we've been so focused on the 20-year because we've been, really, really deep into, trading TLT and TMF. But we've been short Sol from $74. And, look, I think that Sol is looking relatively weak here. And I actually think we're going to see some signs of exhaustion that indicate, maybe the crypto asset class is reaching, levels of overextension. And what I'm really looking for here, all right, let's take one step back here. So I want to talk about Sol BTC. All right. So Solana was arguably the first, Solana was the first coin to really put in a high time frame bottom. I'm going to just remove this stuff. It was the coin, it was the ticker that really got abused the worst out of everything during FTX. Like, this down here at the very end of 2022, Solana was so dramatically affected and asymmetrically affected, unfairly affected because of what happened with FTX. And our thesis here was that Solana bottomed against its Bitcoin and ETH pairs well before, the rest of the market. So if we look at, like, I don't know, let's look at like ADA BTC or something. It's let's adjust these two. So let me go to the 5-day. Let's get these looking nice. So here's ADA BTC. And you can see that I'll mark out these two levels. So when Solana bottomed, right? Actually, I'll do an arrow. When Solana bottomed right here against its Bitcoin pair, which that's my favorite way to approach altcoins, is just charting them against Bitcoin. Because why would you hold an altcoin if it's not going to outperform Bitcoin? That literally makes no sense. So when Solana global bottomed against Bitcoin, look at where ADA was. I just cherry picked ADA, right? Like there's nothing special about ADA here. There's no other reason than I just cherry picked it because it was one of the top performing alts last cycle. And, the point being is because of how dramatically Solana was affected from FTX, it put in that global bottom months and months before most other altcoins did. So, let's take a look at it, right? So ADA put in its global bottom 300 days after Sol did against its Bitcoin pair. So it would also make sense to me that Solana, just like it was the first one to bottom against its Bitcoin and ETH pairs, will also be the first to top. So I'm looking at Solana, and really what I'm looking for to confirm this thesis would be, I want to see something like this. I want to see Bitcoin go on to, I'll put on a different chart here. Give me a second. I want to see Bitcoin go on to make a new high. And I want to see Solana basically put in a divergence. And what I'm talking about specifically is I'm expecting Solana to basically be the first one to bottom. I would like to see this type of divergence where we've got Bitcoin on the right. I'd like to see Bitcoin go on to make a new high. We put in that 2 or 3 day RSI divergence that we've been looking for. Like that was the first chart that we showed. And I'd like to see Solana put in a bounce to a lower high where Bitcoin makes a higher high and Solana puts in its first higher time frame lower high. And then we get a little bit of a reset. So I think that this divergence between Bitcoin and Sol will be very telling if it does come to fruition, because Solana has been leading the market for months, even on the lower timeframes. That's something that Tommy's pulled a lot of signal from on this show, is identifying that when Sol pumps, it's typically leading the rest of the market because there's been so much action. And Solana really did have that beach ball underwater effect. But I am looking for something kind of along these lines. It won't be perfect, but I would be looking for Solana to be locally top tier. And then I also, I've got some other fractals too. Like we've been comparing Sol recently to, that of ETH last cycle. And let's see if I have this drawing saved. I think it's interesting to see where these things are topping. And this is another point of confluence why we decided to short Sol at $74 was because of this fractal. So that people have been comparing ETH and Sol. Sol's one cycle behind ETH, but nobody wants to talk about the elephant in the room that it did something like this. Look exactly. It came back to retest the bottom of this complacency shoulder, just like ETH did back in 2019. So people like to cherry pick it a bit and say, oh, well, Sol's going to go to 600, 700, $800, just like ETH did. Look at this right here. Look at this, right? But nobody wants to talk about what happened before it did that. So a lot of confluence. Yeah.
When price on Sol is going up, man, look at the price. It's going up. So many new projects launching on Solana. How can you ignore that? When you tell them when it's going to go down, when there is going to be hard time frame, like, no. I ain't listening, man. This is not happening.
Yeah, literally. It's price go up, good tech. Price go down, bad tech. It's recency bias, right?
Well, that's a large part of the fundamentals of what we trade are derived from price, right? Like I think of a ton of things that I've used that were actually terrible, and because I used them, and I was talking about this with Jackus yesterday. It's the whole reason I faded GMX was because I used the exchange before it had a token, and it was terrible. So I faded the token run up, and it ended up doing like a 10 or 12x from the bottom. But it's like this, it's a self-fulfilling prophecy with fundamentals and price. And you're seeing that with Sol, right? I mean, it's like you're saying, everybody is calling for, the death of ETH or that Sol has so much better technology than Ethereum, but it's really just that the price of Solana has appreciated much more rapidly than Ethereum. So, people feel more enriched holding it.
Yeah, this is really great point putting it like this, Max. And what I think happens, and we've been like what I keep on saying to people, all right, cycles, they really do rhyme a lot, but you cannot take them one to one. And that's what so many people are. Even if you tell them like, hey, look at this, there are differences, but it's going to be similar. And they'll be like, no, this time it's happening like either the same or completely else, And no, you have to look at the left chart, right? And you can clearly see there are insane amounts of similarities. I even said that in May 2022 with the drop. It did happen, but it happens differently. Before the big drop of FTX, there was a large sideways action, right, in sort of September 2022. Whereas on Ether, there was just a small sideways before the final capitulation. Look at the sol on the left chart. There was a large accumulation going to the side, whereas Ether in 2019 it basically went really up from the bottom and then pulled a large part of the drop. So you need to always adjust these. You always need to adjust that cycle to the current market environment. You cannot just like blindly say, hey, we're gonna go straight up or something like that. So if we took this much time on the left side of the chart, way longer than on Ether, then we can expect the pullback to happen the same. But I wouldn't expect anything like COVID though, because you have to also adjust the timings, right? And the time just got too far away on the left side, whereas on the right side on Ether, the time of this retest was much quicker. So I do expect we all do expect this pullback to happen, but it doesn't have to be as long as what happened after, when Ether did that retest, right? It can be much shorter than that. And this pullback, it can take only like, I don't know, 1 quarter, maybe like at max, 2 quarters, but that's about it. And then it's probably going to start, it will probably start to keep going higher. And I love that retest, Max, that you mentioned to like 50 sub dollars, like that high on left side, above the equal highs.
Yeah, I like this region. I don't know where it goes exactly, but I like somewhere around here.
Yeah.
I don't think. I mean, look, for me to say I don't think we're going to get a black swan. That you can't predict that, right? It's a black swan. You can't forecast that. If it happens, it happens. But I'm looking at this level as. I mean, look. Let's contextualize it like this. This has been something we've discussed on this show before. I'm going to take it off of log. Something we've discussed on this show, actually, I'm going to put it in log just because it gets so squished, is, what if, this is, what if this is our range right here? Actually, let's see if I can fit it in here. What if this is our range right here? And all of this, for those of you that tune in regularly, you know that I'm very into range trading, and range theory suggests that a deviation to one side of a range will more oftentimes than not be met with a symmetrical deviation to the other side of a range. So what if, this was all, deep value. All of this price action basically below 25 was deep value due to, unforeseen, horrible, market conditions and insolvencies and FUD and all that stuff. And, now we're basically putting in that symmetrical deviation to the other side of the range. Then it would imply maybe something like this, and we just come back and retest the range high, and then that's our reaccumulation before we actually go much higher. We could just be putting in, a rebalancing act right here. This might be more of your fair value right here, somewhere between 50 and 25. But because we were so distressed for so long, now we're going to basically, again, just rebalance things and, I guess go into a period of prolonged overextension or overvaluation where we were in a prolonged period of undervaluation for basically all of 2023 before this most recent leg. So I'm really looking for something like this. I think that, this area right here this is probably safe. Like maybe we dip our toe into it.
What's the naked point of control in that? Well, I guess it's not naked at this point because it's already been ripped.
Probably going to be down here.
Yeah. What's the point of control for the range before the breakdown?
The range right here?
Yeah.
Yeah. It's probably going to be the mid-range too. Just scale it out, Monks.
Yeah, we're good.
Yeah,
right there. Yeah. Right there.
Sorry.
Yeah, so the point of control is, it's basically $33.
What I would still love there is that it dropped, just like the price surprised many on the upside. What I think could do is it surprises many on the downside too. And what I would love is that equilibrium retest, where it drops back into that range and just retest the EQ with that drop, which sits around, what is the price there? 37.
So the mid range is 37. Yeah, I mean, I think your golden area to bid is like 48 to 38, something like that. And it's going to take a while to get down here, by the way, guys. I am forecasting something where we see Bitcoin and ETH continue to rally. And when ETH starts to rally, I think it's going to be a bit of a liquidity vacuum. And I am expecting ETH to do something like this. So we're going to keep Sol up here on the right. We're going to kind of have to squish things in here. Hopefully you guys can still see this okay. I'll go up a little bit on the time frame. And we'll go to current. Oops. Okay. We'll erase these drawings. I am expecting something like this where we see ETH continue to climb, whatever happens in the very short term. I'm expecting to see ETH climb up to, 3,000. And at that same point, I'm expecting to see Solana actually red. I think there's going to be a lot of frustration from people because of the unfamiliarity of this style of move where ETH might be up 5, 6, 7% in a day. And basically we're going to see Solana red. And I think a lot of people probably aren't prepared for that. But one thing to consider as well is that the highest 90 and 180-day ROI for ETH is actually December. Going back to 2015, the best time to buy ETH is, in fact, December. And we're just starting to break out of this range.
I still think ETH can have a really nice December. I am unsure if I think that Bitcoin and ETH will both just U-turn out of these structures, though. We could see it. I don't know. Maybe we get the scenario, and I thought it was less likely a few days ago, where you pop into 43, make a slightly lower low, and then you just gig ascend. I could see something like that. Absolutely. That would make sense to me, because that would be price action very similar to what we saw after the wipeout in September of 2021, where you had the first big leg down. You had chop with altcoin weakness generally throughout. You stabbed at the lows a few times. You eventually ran the highs of the consolidation structure that formed after the nuke. And then you made one more slightly lower low before both Bitcoin and ETH went absolutely parabolic. And Bitcoin technically led the rally, but ETH Bitcoin ended up making new highs on the year, within the context of that move. So I think that is a scenario I'm assigning a certain level of probability to.
For sure. Tommy, I have a question for you. What do you think the probabilities are that we could get 25 likes on the Twitter stream and 75 likes on the YouTube stream? Can you attach a probability to that?
I'm gonna say we got about a let me look at my calculator real quick. So I would say we have about a 69% chance of both targets.
Is that
all right,
calculator,
guys?
Or
the deal.
Quant?
Tommy's our quant. He's never been wrong, guys. He's never been wrong. He's the in-house quant. You know the deal. All right, I have a trade offer for you guys. Here's the image. If you're not looking at the video, look at it. I receive likes. You receive alpha. Guys, please consider just taking one quick moment. If you are on YouTube, make sure that you are signed into your Google account and just hit that thumbs up button for us. It really does wonders for our growth. I think we can run this thing up to 75 likes. We got 75 people watching on YouTube. We got 35 watching on Twitter. So the YouTube crew, we got a goal of 75 likes. Again, it just takes one quick moment to hit that thumbs up button for us. And the Twitter crew, it's a new crew. You guys are new here, all right? But I've got high expectations for you guys. I know you're probably just coming across the show for the first time, but you don't get a free pass. We set the bar very high with our likes. So guys, we're at 17 likes, 18 likes now on the Twitter stream. If you're watching on Twitter, do us a solid. Just hit that like button for us. It just takes one quick moment. You don't even have to make sure you're logged in, because you have to be logged in if you're watching it on Twitter. So you just got to take your thumb or your pointer finger or your middle finger, whatever finger you want, and just hit that thumbs up button for us. Hit that like button. And maybe, hey, if you're really liking it, if you're really enjoying the alpha, maybe even hit a retweet for us. That would be epic. But yeah, guys, thanks so much for being here. Furthermore, if you are new here, this show is Market Check, brought to you by Because Bitcoin is our daily live show. We are live 5 days a week, Monday through Friday, and it's basically a 2-hour-long alpha dump. We focus primarily on charts, TA, all different types of analysis. It's a really, really fun time. So if you haven't subscribed to the YouTube channel yet, consider hitting subscribe so you can be made aware of when we go live. And if you're on Twitter and you haven't followed Because Bitcoin yet, hit that follow button. We go live multiple times a day. Post a lot of good information, a lot of good tweets. So yeah, please consider not only liking the video either on YouTube or Twitter, but also following or subscribing if you haven't yet. Again, thank you guys so much for being here. But anyways, Jack.
By the way, can we go, since we have started Twitter, can we also go on Twitch at the same time?
I think we can. We don't have a Twitch account though. We have to make one.
We would go Twitch, Twitter, and YouTube at the same time, man. So that we can rant about the likes everyone.
we just berate everybody to like the video no matter where they are.
Well, Carl Magnus said the repeating like runs are a little too long every time. Try to make them a little shorter, Max. Well, you can make the like button a little quicker. That's also another way to put it.
Oh, Carl, I'm sorry, man. I know I don't like doing it, but it actually helps so much. If it didn't help, I wouldn't do it. Yeah. But as soon as you guys start liking it, we immediately see more people watch and the content gets pushed. So it's like, it's this balancing act of, trying to not be annoying with it, but also like people come in and enjoy it, but then they're like, oh, I forgot to like it. So I'll work on it. We try to make it more friendly, like we put the memes up here and stuff. We try to add like a fun flair to it, but unfortunately we do have to remind everybody. Apologies if it's a little bit repetitive, but it is what it is. We can't be perfect. We can't.
And some like it legit works, because whenever we do remind it, there is always like double the likes than if we don't remind it. It's it's just what it is. If you want that free alpha from us, guys. If you don't want to hear about the likes, guys, you can always join the Discord group, right? We don't talk about likes there.
That's very true.
if you want the alpha straight up, there is a premium service at the Discord. If you want the free alpha here, well, gotta deal with the likes. It is what it is. So free market.
That's true. If it's a free show, you have to deal with commercial breaks, right? This isn't pay-per-view. So, all right, let's Jackas, would you talk about you have an interesting thesis on USDT dominance. Would you want to go into that a little bit?
Oh, surely. I can share the chart.
I know the people are hungry for Chef Jackas, and I know you're cooking up a nice meal for them.
Well, they are, but we had no promise of likes today, right?
Well, I did just set a goal of 75 likes for YouTube. We're at 74, so maybe we could get one more like, and then Jackas will cook, because technically you guys would hit our goal then. That would be great.
That was your goal, Max. My goal is 100 likes.
Oh my gosh. Oh my gosh.
I need that meme. Oh shit. Here we go again.
Yeah, we can do it too. We got 74 people watching, guys. I mean, I know there's enough people in the crowd to get there.
So let's talk about TIA in the meantime. We've been playing TIA. I had a nice long on it. I got stopped out on a trailing stop on this flush right here. So I'm out of this trade as of right now. I know, Tommy, you were playing it. Do you think there's a chance that TIA, hits like 15 to 20 bucks before a major reaccumulation phase? Or what are your guys' thoughts here? This is like the hot new ticker. We've been watching it pretty closely, but on the low time frames, this thing is an absolute meat grinder. It's very difficult to trade on perps. But what are you thinking, Tommy? I know you're maybe still in a trade, maybe not.
Yeah, I actually longed last night, or I guess this morning, technically near like 11.3, 11.2 in that vicinity. I'm looking. I think within this move to describe the lower time frame setup, right? I mean, we had I think a 5 or 15 minute 3 drive pattern on TIA, and what you'll see a lot with those on altcoins is a lot of people long for the 3 drives, looking for the breakout. It doesn't happen. You have the liquidity sweep below the structure that had the 3 drives. They all get taken out of the market, and then it actually goes to their target. So I think, probably like something around 13.5 today would be fantastic if we can get it. I do think it's on the cards for TIA, but I think you're right, Max, in the sense that it's going to continue to be absolutely miserable to trade. That is pretty much along the lines of what I'm thinking too, is that we get some sort of spike into 13.5, sideways chop for another few days, and then eventually it'll go up to $15. But I think as far as like, if you are leverage trading, there's definitely better coins to be trading, not only because this is such a meat grinder and because it's so choppy, but I mean, at this point, the moves on TIA are like they're 10 or 15% spikes. That's a good bit, but it's not any more than what you would get trading SOL, right? On a big trending move. So you can save yourself the hassle and probably trade something else. I'm being very, very picky about when I trade TIA now, because I do think it is primarily a spot holder bag. It's going to give you setups very rarely. But if the setup is not explicitly there, it probably shouldn't be taken. Or if it is taken, I take it with really small size. Like yesterday, I tried a long setup yesterday that didn't work out. I think around like $12, but I like I said, I didn't have my size up on it, so it didn't really matter. It's not really a leverage token or like a leverage trading token, but it is. When you catch it, it feels great, obviously, right? Because it tends to trend pretty aggressively before it starts chopping again.
What is possibly good for trading could be order here. It looks like a tradable one. Not for me though, but I think it seems there is lots of volatility in that market and pretty clean levels too for trading, seems like. But yeah.
I mean, Ordy had all that FUD around it too. I think he was he's like a Bitcoin dev, Luke Dasher or something. I think that's his name. It's basically implying that ordinals are a bug that will be remedied sooner rather than later. And then you had like Max Kaiser tweeting about it, and I mean, I think it looks like the FUD got absorbed for the most part. Something like this on TIA I could see, man, just like equal highs left at basically the all-time high. It kind of has done this 3 drive nuke and then recovery. So I don't know, maybe some play like this. You have to be really particular with TIA because it's such a meat grinder. But yeah, I mean, I think short-term scalping is probably the winning trade on it if you're good at it. And then if you're just bullish on the asset and want to pick up some long exposure, I mean, it's a spot holding, at this point in its life. It's just too disgusting on the lower time frames. It really is. But we can check out Ordy also.
Oops. Ordy's been a strong coin lately. I've got some friends trading it.
Yeah, it also looks that we never know ahead, but it could be another reaccumulation here before more upside, just like the one we've seen around $20. Maybe. Who knows? Maybe it continues to like 100 from here, or maybe this is a distribution.
Yeah,
I think
I
it goes
don't.
up personally. I mean, I have a bag of ordinal tokens that I think would stand to benefit from something like that, but I think Ordi makes a break towards triple digits. It's really kind of the only, I guess, other than STX, but for whatever reason, that coin is also on the untradeable list for the time being. I think that's a spot coin as well. People, when we talk about like how do you speculate on the ordinals narrative from a centralized exchange, Ordi is kind of I would say it's been the number one option within this run. STX, I remember had its run in Q1, and it was fun to trade back then. But I think it's still waiting for its its moment in the spotlight. Orti's kind of stolen it here lately.
Oh yeah.
Mm-hmm.
I mean, I would love if STX gets some of that spotlight too, because I'm having a fat back there. I mean, it has run nicely though, right? But I would love even more. I'm greedy.
Well, let's see STX. I mean, it could just be good beta to Bitcoin ultimately.
It is. It is.
And you would think that if Bitcoin runs, this should run. Timing of it might be difficult, but this is pretty textbook right here. This,
yeah.
This little bottoming range, how this formed. Perhaps, I don't know, it'd be something like, this could be the next one, and then we just kind of keep leveling up until, eventually things break out.
Look at the queen liquidity left above us. Like, that's what I'm betting on. Get swept. There is a clean around towards that, in my opinion.
Yeah, I could see this. I could certainly see this.
Sitting in spot, comfy, waiting. Buys were made much lower. This is what it is.
Sitting on spot, comfy, in my lane,
moisturized.
Flourishing. Oh no. Delete that.
Okay.
Adjust that.
No, it's
Adjust
that.
that.
We choose to ignore that. We choose to ignore that. Okay. So right now we're at 79 likes on YouTube. We're at 20 likes on Twitter. Technically, Jackus, that's 99 likes.
No.
No.
We were talking about YouTube, of course.
You didn't specify.
No, that's cheating. He's cheating!
Let's see. What do we have here? Here's the deal, guys, with Bitcoin. Here's the deal. Let's get rid of this. Let's hide these. Let's actually go over to the CME chart.
There's actually one alpha, guys, that I would love to share with you tomorrow. Okay, not today, tomorrow, one specific alpha. And you guys know that when I say alpha, it's really something new. I'm not, copy pasting some shit that most influencers are doing. When I say alpha, it's something that hasn't been seen, that you want to know about. I will be sharing that tomorrow. So be sure to be here tomorrow. And I will be demanding new record for that one. Okay, 125 likes tomorrow.
Oh my god.
125 tomorrow. But it's worth it.
The gauntlet has been thrown down, guys. Will you answer the bell tomorrow?
I love it. Tomorrow. Today there will be alpha too, but today, but tomorrow. James check his
So these CME gaps are oftentimes overlooked, and
right,
I don't know why people overlook them, because they have like an over 90% hit rate for fills. I think even higher than that. But I'm really wanting to see the CME gap get filled. I don't know how it gets filled or when, or maybe it happens much later. maybe we come back to it a year from now. I have no idea. But we got so close to it yesterday. Maybe we see something like this, and then we go up. I don't know, but I feel uneasy getting that close to the gap and leaving it. I would just really love to see it get filled. And, then from this perspective, maybe we hit like this trend line right here, something like this. I'm not sure. Do you guys think it needs to get filled? Or it will?
Yes, but not right now. It doesn't have to get filled right now. I mean, once again, some guy on Twitter asked me about this because I was doing like a possible lower time frame scenario. And he was like, what is the probability of that CME filling now? And, and I was giving him like 50-50. To be honest, we can just start going higher from here, or we can first sweep the lows and then go higher. That's the thing about lower time frame, is that it's really 50-50. And you just gotta play the probabilities at the extremes if you are trading, basically. I mean, if you can add to your probabilities with like looking stuff like order flow, some big orders there, and whatever, then sure. But to be honest, it can, like, what I'm very positive on is that we will spend some, and I've been saying this, we spend some time between 40 to 45K now, like few days, maybe a week, maybe 2 weeks or something like that. But I'm pretty positive that we see a future higher time frame, like higher. And of that, I'm positive. Does it happen straight from here, or do we take the lows one more time and shake some more leverage loans? Both are possible, to be honest. And by the way, one of that alpha is actually, why we are going to be moving up. One of that alpha will be shared today, if we meet 100 likes, of course.
This is the most ideal setup for me to take fresh longs, for what it's worth. I don't know. Again, I don't know how we get there. It's anybody's guess. My job as a trader is basically just to come up with as many possible plans and paths as possible, and then just act on them when it happens. And I'd like to see the CME gap get hit. I think, a retest of this region right here. I'll change the colors so that they can, we'll go green. Oops.
I would love this region to get front run, just like in 2020, it got front run, that retest, after the 12K break.
Yeah. I mean, I think front running is more bullish, like Tommy's always preached. If you get that perfect retest, it's oftentimes not as strong of a trend as you thought. So yeah,
like I could see the low getting swept. We touch the upper boundary of the CME gap, right? And then run. That's probably the best case scenario for all.
So maybe we front run the green box, but dip into the CME gap.
Legit.
Do this. So maybe only go. It'd be nice to see Bitcoin at 39K or like with a 39 handle to start, because I think a lot of people would just be like so nervous and panic selling 39K just because, oh my gosh, we're back under 40K. Did you sell the top on Anon? And then, we just run it back turbo from there because they panic sold. So I think take out all these lows, dip into the CME gap. Jackus wants this green bid level front run. I'm fine with that too. But yeah, I mean, I'd be looking for something like this, and I'd be looking for an extension all the way up to the midpoint of the monthly FVG that we formed, basically upon distribution of our all-time high. So even 50 to 52K, something up in this region. And then from there, we can reassess. Maybe it gets, front run a little bit, maybe we pull back. Who knows? I don't know what happens from there. We're not going to forecast that far ahead, but as of right now, I mean, I think that this makes a whole lot of sense. Truthfully.
Yeah,
I think that'd be a dream too, Max. And I think because that's the dream scenario, if we do get it, it's going to look horrible trying to position for it.
Expand on that.
Can you check?
Expand on
Can you
that,
check?
Tommy.
Can you check in the meantime the 2020 scenario, the fractal of this one?
Oh,
Tommy
yeah,
can cook.
yeah. So
Tommy can cook in the meantime if he likes to.
I'll pull it up, Tommy. You cook. Let us know why you said that.
Oh, I was just gonna say, I mean, if they're gonna run a scenario where they push it into 43 and then down into like 38, 39, and then they rip it, I think if they do that, there's probably going to be a few more days of range in here, like a fake out or two in one direction. It's going to be a pain in the butt if that's the scenario that they're going to try and run.
Oh, for sure. For sure. And I think that's better. I love when it's difficult.
Yeah.
You know, I really do. Is this what you're talking about, Jackus? This fractal right here?
Legit that one, yeah.
Okay. I'll fit it a little bit better.
See, it's fucking insane. And I mean, it can happen each time differently. Like this time, right? When you look at the fractal, we took the high at the very top. And in 2020, we did not take it. But then we had a drop. This time we can take the low too, one more time. But you know, back in 2020, we just made a sharp sell-off and then quickly bounced back. So these can change slightly, right? But the overall picture, in my opinion, stays the same.
This is a pretty wild fractal, especially if it plays out. Oh no, where did it go?
You use the same chart, so it's in 2020. I hate when that happens.
Trading view, you need to fix that.
But if you are going to use, like, I don't know, OKX, Bybit, or any other, you know, chart on the right, it will stay exactly where you are.
Yeah, it's because I use the same one.
Yes.
Shoot. Oh well, that's all right. We found it. Now we're gonna massage. This is crazy.
Right.
Look at that thing. Oh my. Who could have foreseen?
Who could have foreseen? Yeah. So I think this still makes lots of sense, but as usual, you need to adjust it to the current levels. And I still think that maybe touching that upper boundary of that CME gap does make sense, and we could see that sweep, you know, one more time.
Mm-hmm.
Unlike back then, there was no CME gap there. So yeah, that's how I work with fractals, though.
Yeah, I mean, I think the context of this one certainly makes a lot of sense, especially like zooming out where we potentially are in, you know, the cycle, right? Let's do this. So, you know, right at this range right here, you can see that we had a high time frame breakout right here, and we had a very similar breakout for Bitcoin just recently, you know, right around here. I mean, the context is, and even this bottom part looks so similar. You know, this whole move right here. I mean, this is like, you know, this is so similar. It's kind of crazy to actually to look at it this way. That's wild. Look at that. It like looks the same.
But fractals don't matter.
Look at this thing. What the heck? I mean, it won't follow it perfectly. They never do, but this is wild.
Yeah.
Wow.
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 I need a Mr. Owen meme. Wow.
Wow.
That's like,
wow.
Isn't that funny that he's like known for that? I mean, as a meme, right? That's like his big line.
Wow.
It's like Vin Diesel's line is, it's about family. Family. Allen Iverson talking about practice. Owen.
Wow.
I'm a big Owen Wilson fan. I don't know if you guys have seen the movie. I'm sure you have. Wedding Crashers. It's my all-time favorite movie. But Owen Wilson and Vince Vaughn it's a master class of acting and comedy.
Yeah, it's a great movie. So funny. All right, Jackus. Jackus, we got to 80 likes, man. We're an hour and 10 in, man. We need you. How about a partial cook? They got partial likes. How about partial cook?
Sounds good.
Okay, let's partial cook.
Sounds good. I'm gonna be you know, I don't know what's the right word today to use, but I'm gonna be easy on the guys. Sometimes you gotta do it, but don't get used to it, guys. It doesn't work that way.
All right, Jackus is gonna cook. You guys owe me. He didn't want to cook. He wanted his likes.
Yeah. So this is what I talked about. That we can. By the way, guys.
Where did you get that picture of my face? Did you take that while we were on the show today?
Yeah, you were talking and I was memeing.
Oh my gosh. That's hilarious.
It's taken out of the context, of course. I think you were watching this. You were
Smash
talking
the like
about
button.
Yeah, so I could definitely see a sweep of this low, you know. But let's dive in why. So actually, wait. I gotta think where to begin. Okay, so first of all, let's start here, right? Okay, and we said partial alpha. Okay, so partial alpha is just going to be BTC today. Okay. So as I was saying, this higher time frame needs to be way longer. Okay, you do not get a break like this out of this longest accumulation, and this one is as long. Okay, this is as long as this. To put things into perspective, this bottom, and look at the range though, right? Look at the range. Look how this one is squeezed lower, while look at this size. Okay, that's important to put into context. And you just broken out of that, right? When we broken down from this, look how long we spent down here. Okay, we have now broken out of this one, and people suddenly expect, like, I don't know, this to happen. No, it doesn't work that way, guys. Even if we would get some sweep, it would get immediately bought up, immediately. And this is still most people's wildest dream, where they want to buy cheaply. So this sideways action, it needs to take time. Seriously, it needs to take way more time. And we do not know if, like, this box happens here, okay, or if it happens here. It can happen anywhere. But until it happens, we are bullish for now. And there is some alpha that might be shared tomorrow around this, okay? Might. But where it happens, we'll see. But until then, we are bullish, okay? And the sideways action needs to happen. And we have seen the same prior to that, okay? When we had these accumulations, then the distributions, they need to take time. They need to take time, at least some time, okay? Just like here, think of, we might be around here, we would have to zoom in here. Okay, let me actually zoom in. I'm gonna change on H4, right? So even if we were to get some freaking scary drop like this, it would have to, it would probably get bought up immediately, and you would still need to get this. So there is lots of time for that pullback. And even if the higher time frame pullback comes, by the way, then I still do not think we ever see sub this cluster, right? We can dip into it. Maybe we like fill this inefficiency. Maybe we just go to halfway of it, 50%. Who knows? Who knows? Really, lots of stuff can happen at that time, and we need to wait for future price action. But before this, in my opinion, before this higher time frame pullback can come, we would need to see this sideways action. And I simply do not think this pullback happens like this. Just that doesn't fit when I look at this chart. And just like when we were dropping here, right? You get the move down basically in one line. And what you need to get is you need to gather energy for future move, right? Basically, this is how the bear market happened. This is everything. Two higher time frame rate accumulations and then bottom. And this is what people often fail to see, right? So I do not think we go ever below this cluster once again. And this is one of the reasons why I think further upside is next. But now
And Jack, is the timing of that distribution you have drawn there is interesting, because we talked to start the show about how right now the market's pricing in rate cuts in potentially late Q1, early Q2. And it would make sense that Bitcoin would flush along with legacy markets, but also it makes sense, just like the fractal shows, that it would reaccumulate and actually be quicker to recover than legacy markets because it's trading like a digital commodity rather than a risk.
Yeah. Yeah. So definitely. Yeah, where I wanted to continue, guys, is now that wait, let me actually hide this one. So if we anticipate, right, and this, the structure here has been sort of broken on like H4 or so. So I still do expect that we now range between this area for some time, do it like a mid reaccumulation before higher. But I'm generally looking for more upside. That's it. And now let's look at why and how it could unfold. So I was saying the moment we sweep this low on the USDT dominance chart, which is inverted to BTC, quite cleanly. If we put in BTC, you can see, they can differ in magnitude, and obviously as USDT gets more adopted, it will always be in a bull market. So you cannot like look at it in that regard, right? Because BTC will be in a bull market too, just like USDT, as they both get adopted. But you have to look at the like overall moves. So whenever there is a impulsive move in USDT, there will be a impulsive move in the opposite direction for BTC and vice versa. The magnitudes will differ, of course. So a big drop like this in USDT will mean a big upside for BTC. And I still do think that USDT should be going to this level before doing some turnaround, right?
That's a really big level, like those three bottoms. Or I mean, you have it flipped, right? Yeah, those three. Such a big level.
Yeah.
Such a big level. Yeah.
Yeah, for sure. Maybe we go, it touches these, bounces again. Who knows exactly? But like in my opinion, whenever we get down here, it's time to rotate, at least temporarily. But yeah, zooming in, right? And I was saying that, by the way, guys, that I expected these lows to get absolutely raped up here. Yeah, apologies.
See, you just sneak it in quickly.
I didn't even realize until I said it. Look at that, right? But charting these markets is useless. How can you chart the yields and how can you chart the USDT dominance? Doesn't make any sense, man. Well, anyways, so this led to the upside, and I think this matters a lot. Now, zooming in, we could see still, like a upside on USDT where it goes for these highs and retests the lower boundary of this cluster. That can happen. Doesn't have to, right? But what I'm pretty positive about it, at some point we are closing this inefficiency and going down again. So I do not know. I'm not afraid to say so that I do not know if like we go higher first or we go like if we, for example, bouncy, right, retest this sort of breaker and then go down. It can, maybe it happens like this. Who the fuck knows? But I'm pretty confident that we fill this and then continue lower essentially. Now, if we inverted that for BTC, what can happen is that this is the inefficiency for BTC, just vice versa, right? So we have CME gap above us that's ready to get filled at some point, and we have this one below us. So maybe we have that sweep one more time down here, right? Like a third sweep, third drive, and we sweep it, touch the upper boundary, we front run everyone that wants to bid this cluster, and we head higher, something like that. Maybe so slightly higher, maybe it's like this. But yeah. This is my take. Why I think we go higher, and we have to put it in the context of what we talked about in the beginning, where I still think. And by the way, I know, Max, that you don't consider these to be gaps, but I still find this one to be a unfilled gap because we did, open here and we did not fully close this one from the opening. Like there was a wick prior to that, in the day, but had it not been there, there's a gap here, and I still do expect this one to get filled. There are also equal highs right here, and it does make sense that we continue to 53K, which is also like there is lots of confluence at 53K, just like there was lots of confluence for 45K. So this level definitely does make sense to me from lots of perspectives.
Yeah, I mean, I guess I would consider it maybe like there's wicks in there, so when I'm looking for gaps, I'm not looking for like total fills or closes. I'm just looking for price action within that gap. And the one above us, I mean, it's fine. I guess I would give it to you. I mean, it fits my bias, so I'll give it to you. But I would consider it to be a gap.
What about this one, though, right? I talked about this one when we were down.
Can you go to the daily? I think the daily time frame is the time frame to look at it on, not the weekly. Yeah, that's a gap. That's a gap.
Is it?
Yeah.
But the wick's overlay.
No. That's the wick from before the gap.
How does the differ from this one?
Go to the one at 69 or at 64K. That one right up there to the left.
Look.
See, that's what I'm talking about.
This is legit the same.
No.
The wick. How?
So the wick on that one, Jackus, that you're talking about happened before the gap, not after. We didn't fill that gap until September.
But no, look,
Yes.
look. I'm gonna go candle by candle. There is the drop. Price then bounces a little bit and closes on Friday, right? There is the drop. Price bounces and closes, right? Then you have, sorry, this was not Friday, this was Thursday, right? Then you have a 1 day after. Okay, there's slight difference, but this really doesn't mean anything. And then you have the weekend. Price opens below the wick. Okay, and then what happens? Price then bounces, touches the lower boundary of the wick, and then continues lower. What happens here? You have the weekend. Price opens below the wick, goes back, touches the wick, and then continues lower. This is really the same scenario.
No. I'm
Okay.
stealing the screen. I'll show you and then I'll give it back.
Okay, I want to see
Okay.
how does differ.
All right, I'm going to show you the correct way to be a CME gap whore. Okay.
By the way, quickly, Gigi is asking, is it recommended to do TA on USDTD? Yes.
Yes. Okay, let's go back to this. So on the daily time frame, this is your gap right here. A complete gap in the chart. Do you see? It's a gap. This wick right here, the one you were talking about, this big red candle, this happened before the weekend, before the gap was formed. So this is your gap. It's completely unfilled, no wicks in it. For it to be filled, price action after the gap down has to come back into it. This gap was not filled until all the way over here. This is when we filled the gap in August. All right.
I see what you mean.
Yes. Now this right here, hang on. This one right here, this one right here, this is your gap. This gap was filled right away. See, we gapped down. We came back the next day and filled in that gap. That's the difference.
You have okay, I'm gonna teach you a little bit more.
Oh my gosh. Oh my gosh.
I mean, it's okay to have your own definition of this. And now I understand what you mean with that. But I want to give you...
Are you even a real CME gapper or not? You don't even seem like a real gapper. You're like a fake gapper. You don't respect the gap like I do. I live and breathe by the gap. Okay?
Bro, I was CME gappering way before everyone, like down here, right? I was CME gappering here. And all of these.
A fake gapper.
And the thing is that the CME gaps are no different than this. Okay, like I understand that you have. I'm gonna give you my explanation and understanding of gaps and inefficient moves, because those in my world they are the same, and I do not view CME gap too differently than inefficiency. Really, it really depends how it happens. And this, if it was traded over the weekend, could be easily a gap, right? You would have Friday close, you would have weekend, and you would open up here. And then, so this is an inefficiency. And then what happens really though is that there's the inefficient move, but you need to understand that sometimes these inefficient moves can happen like this and never get filled for the very reason that they filled their prior higher time frame swing. And this is all that matters. They can get filled, okay? They can, but they do not have to sometimes. And this is all that it takes. And sometimes, once again, sometimes this can come back, fill this, right? And then continue higher. But if it happens like this, if you're gonna zoom out, I do not know if it happens here on any time frame though, but probably not right in this case. But sometimes what I'm trying to say is, okay, I'm gonna give a example, is that this is basically a price swing with a valid retest. And this can be, this can be your, I don't know, daily time frame, whatever. And then on H1, you will have a inefficiencies all the way in this, but on daily, it will look like this, right? On daily, it will look like this, and you will have no inefficiency. But on, like, if you zoom in really, okay, there is no inefficiency in this. unfortunately, for the examples. Like I could find an example somewhere, but this could have been an inefficient movement higher, like this one, through it. And then the inefficient movement could start all the way down here and just go straight up. And then on the daily, this one would get filled. But on the M15, the inefficiency would not get filled, right? And this is what I've seen so many people doing wrong, is that they expect every inefficiency to get filled this way. But if you filled the higher time frame, if you've been efficient on the more higher time frame, that's sometimes all it takes, right? I wish I could find a good example here in life, but I know that you know what I mean with this one. And so going back to that CME, is that there was a swing. Actually, let me try to put a replay button here. It's not really. There's only one hour candle, but like this was this. Maybe I can go. I cannot go M15, unfortunately.
Can't go on the 15-minute. Got to stay higher time frame. You know who would be proud?
Janet Yellen.
Janet Yellen. Good old doctor.
Yeah. So this swing has been touched, right? This low, because if you would zoom in more, there was a swing. It bounced. Shit. There was a swing here. It bounced, and then it gapped down, which is an inefficient move. And then it went higher, and it then continued lower. But there is still this inefficiency on the M15 or so, or like, in this case, daily, and I think weekly too. But this, and as I've been saying, these do not always have to get filled. But as we know, on the upside, all gaps get filled eventually. So there is an inefficiency here. There is an inefficiency that has not been mitigated, right? And actually, I got sort of lost. Did I zoom out a little bit? Okay, here, right? This is legit the same thing. You had that wick, you had that bounce, you opened under it, and you came back to retest that wick low. But there was still that inefficiency that stayed open. But
yes.
it's my explanation, and I understand yours.
So where's the gap that we're going to fill next? Is it? Can you show that one again?
You mean this one or the current one?
Well, yeah, I think that one. Can you go back to that one, the one at 52, which is also confluence with the EQ or the mid range of that monthly FEQ that I've been wanting filled. Yeah. So you wouldn't consider this filled. You wouldn't.
No.
This is, actually, yeah. Zoom in a little bit for me. Zoom in, like even more.
I cannot go on M15.
Or just like zoom way in, like make it bigger. You can stay on. So if you drew a line from that little candle in front of the wick, that one, yeah. I guess technically that's, that could be, yeah, exactly. Right up in there. If we want to consider that the gap. Yeah,
that is the gap. And it's also confluent with your monthly FVG, right? That's a valid point. If I exit and I go on a monthly, then this is your monthly gap too, for a reason.
Yep.
So this level will want to get filled at some point.
Oh, it's going to get filled soon. It's going to get filled very soon.
Yeah. So there is a lots of confluence in here. And this is exactly what I talked about. So on the monthly, or sorry, on the weekly, actually I was on the, oh, okay. On the weekly, right? You have the wick low, then you have the bounce, and then you have another wick. And this never got mitigated on the weekly, right? Like there is an inefficient price movement. It's the same as this one. And look where the price then bounced. Because you had a move down here.
Yeah.
Like, right? You see
Yeah.
that?
No, I see it. I see it.
So, in my opinion, this level is a draw on liquidity to get filled, and obviously then we have one higher up though, which nicely sits with the macro range too.
Well, the real fun starts is if we don't just hit that gap that you have drawn, but if we actually flip above it, you know.
Yeah, that can happen for sure, because there's lots of there will be lots of FOMO at that point. So
Yeah.
I could see, like, going there, bouncing here, going higher, major distribution, big pullback, bull market. Definitely does make sense.
Mm-hmm.
You want to steal the screen, guys?
Yeah, I can steal the screen. I actually think this would be a good time for us to wrap it up. We've been going for a while here.
Max with the quiet alpha drop.
Hey, you got to pay attention.
Since we were on the gas, and before you go, Matt, Lewis player was asking what about the gap in low 20s. So this is something that I was addressing for a long time too. Actually, let me see. Is that there will be? It's a valid point, okay, that there is a gap. But what I keep on saying is that there will always be gaps on the downside that never get filled. It's just the way it is. There will always be a support that is untested. There will always be equal lows that will stay equal lows and never get swept. There will always be gaps. There will always be something below us, unmitigated prior all-time high, and so forth, right? Like, look at this. This is basically what I talked about. This is a good example, right? There was a gap, inefficient move through it. And then if this candle, right, if this went back down, it could only touch this upper boundary and not fill this whole thing, because this was the big move. The same thing happened here, by the way. Actually, this is a good one. So we did fill this swing, which was like a monthly probably. Shit, I hate this. Right? Well, we did not fill the entire gap, but we did fill this one, right? Maybe it was like on 2 months. And like, you wanna, I'm not saying how price must behave, because it could easily went lower and fill the entirety of this gap. And sometimes that will happen. But what I see often, especially from the ICT army, is that, like, we need to fill this gap. No, man. The price is not always completely efficient, and you need to count that in. Like, as I keep on saying, ICT keeps waiting for the sweep of these equal lows, and it's not happened. So this is a good one. Not, once again, not all gaps, not all all-time highs get retested, and so on and so on.
And to that point, if you go to like the legacy markets like QQQ or something, there's plenty of gaps that never got filled on QQQ, Plenty of equal lows, plenty of gaps, from way back in the day. There's plenty of gaps that just
probably on the daily too.
yeah,
But
like there's some, look at down there. There's some, there's plenty of gaps that just, and I don't think we're going back there at this point. I don't think it's likely. I suppose, somebody out there thinks we will. I don't think so. But there's plenty of gaps that just don't get filled, and I think that's actually maybe a sign of a maturing asset class, truthfully. To just kind of ignore it and just be like, we don't need to be petty about this. This is more of a fundamentally driven asset now rather than technically driven, which I think can be, again, a sign of maturity and a good thing. So I hope that the gap at 20K doesn't get filled for Bitcoin at this point. I would hope not.
Would not be a good thing if it did.
No.
Imagine directness.
Dude, we're too far past it now. If we were at like 30K, I would say fine, let's just hit it. But for us to go back down to 20K would be very dangerous.
If we go back to 20K at this point, then we're getting to Capo's target.
Yes, I would agree. Dude, is QQQ at 400? Oh my gosh, I didn't even realize. What the heck? That is incredible. Wow.
400.
Imagine if January 1st you had bought some like $350 calls for end of the year. The payout on those would have been crazy.
Oh yeah.
January 1st, you just ape into some QQQ 350s for end of December.
The worst recession ever. Sell everything. Whoops! I told you to buy.
You just 20x your options if you did that. That's crazy. All right, guys, we're going to call it here. Guys, thank you so much for being here. I hope you guys enjoyed the stream. Thank you guys for showing up and supporting us. Looks like we got to, on YouTube, 85 likes, and on Twitter, looks like over 20. So, guys, thank you so much for being here. If you are new here, this is Market Check brought to you by Because Bitcoin. We are live 5 days a week, Monday through Friday at 10:50 a.m. Eastern Time. It's an 1.5 to 2 hour long alpha dump. We talk charts, narratives, have some fun, have some good discussions. If you haven't yet, please consider subscribing. If you're on YouTube, hit that subscribe button so you can be made aware of when we go live. And if you're here on Twitter and you haven't followed us yet, please consider liking and following the new Twitter stream. Again, we just started doing this on YouTube and also Twitter. So you guys, please consider liking. Now, you guys know what's coming next. This is only a limited time offer. If you enjoyed the stream, if you enjoyed the analysis, if you enjoyed this and you learned something, consider checking out the first link in the description below. It's becausebitcoin.com/premium. That will take you to our website where you can sign up for our premium analysis package, which at this point is just a Discord, but we have some products that we are spending a lot of time, energy, and money to roll out, which you guys will all have access to very, very soon. Some disruptive technology. So if you want to join our community, I'll tell you a little bit about it. All of us in there, me, Snorlax, Jackus, Will's Outlook, Tucker, and Wabi all have active positions channels. It is not a signals group, but in the spirit of transparency and education, we do share all of our active positions and setups. So, we really focus our show here, Market Check, on analysis and, setups, but taking it to that next level, actually executing. How do you place bets? How do we actually play with our money to capitalize on the stuff that we are theorizing? And that's really the focus of the Discord. So on top of an active positions channel, we also spend upwards of 2 hours per day doing 2 private live calls with our entire Because Bitcoin team and community. One before the New York session opens, pre-market, and then the other one right before the New York session closes. So in my opinion, the 2 most important times of the day. Now, if you want to give that a try for 30 days for free, I'm going to put this across the bottom of the screen. When you go to checkout, you can use code FREEMONTH for 1 month for free. This is a limited time offer. We are not going to be offering this for much longer. The Discord has been growing like crazy and we want to ensure quality. So eventually it will be closed off. So if you want to try that for 30 days for free, consider using that code below. Again, you'll have to put in your card, but it will not charge you. So you can try it 30 days risk-free. But it's a really great experience. And if you enjoy the show, if you enjoy learning from us, talking with us, You will certainly enjoy the Discord. I will say this, and I maybe come with a slight bias, but I truly do believe this. There's not a community out there. There's not a business out there that works harder to cater towards and help their community than the Because Bitcoin community. So, yeah, guys, please consider checking that out. That's the first link in the description below, becausebitcoin.com/premium, and then use the code at the bottom for 30 days for free. That's only, again, going to run through the holiday season, so not too much longer. So jump on that while you can. But I'm going to kick it over to Tommy to say a final farewell.
All right. Thanks, Max. Yeah, I mean, Max outlined it perfectly. I don't think there's a community that works harder than we do as a whole, both as a team and then as the community members that are in the Discord and have joined, both recent and long standing. I mean, everybody in there is all trying to get better and thrive in these financial markets. That can be easier said than done, right? Twitter paints a very much more deceptive picture of what life in financial markets looks like than what it actually is. And, I think our Discord does a great job of kind of balancing those two. But yeah, guys, that's all from us. We will have an episode of Market Talk with the legendary King Wabi later this afternoon. A reminder that those shows are at 4:15 to 4:30 Eastern, or not a 15-minute show, but they typically get started at 4:15 or 4:30 Eastern time, depending on when we wrap up with our Giga Chads. But those are usually daily. And of course, Market Check, we will be back tomorrow, as well as Friday, same time as always, guys. Have a blast doing these shows. And yeah, guys, stay safe. Happy Wednesday. We will be back tomorrow, like I said, and have a great rest of your day. Thanks again.